Come on guys, let's solve case 3 from our case scenario discussion, and this case is on accounting standard 10 with a pinch of accounting standard 16 borrowing cost in it. Let's start reading the question. Mars Limited is a manufacturing enterprise which is starting a new manufacturing plant. When you say plant, it's not a machine, it is a factory. It is a factory. Plant and machinery means factory with machine in it. Let's see. It has commenced construction of the plant. Oh, it is not an acquired asset. It is a self-constructed asset. It's a self-constructed. Fantastic. On 1st of April 2023, it has incurred following expenses. Remember, certain expenses which can be included in the cost of the plant, expenses which cannot be included in the cost of the plant. Same thing is what we're going to discuss now. It acquired land for installing the plant, 50 lakh rupees. Help me with this. If you acquire a piece of land for the purpose of construction of a plant, is that value of the land included in the cost? The answer is no, it should not be included in the cost of the factory or plant. The reason being, plant is an asset which is depreciable in nature. Land is an asset which is non-depreciable in nature. You need to record land and building are two different distinctive assets. However, if you're talking about plant, you can include the cost of the land in the asset if you think the value of the land will decrease because of the plant being constructed on it. Can. But is it a should and a must? No, it is not a should and a must, but you can choose to record it. It can be recorded as a part of the cost of the asset. But if it is not going to be depreciated, you won't charge depreciation on the cost of the land. You should charge depreciation only on the cost of the land. You get this? Sorry, plant. On the plant, you will charge depreciation, but on the cost of the land, you should not, because if it has indefinite useful life. Are you getting it? Say something. Fantastic. What is after that? Conclusion is, for depreciation purpose, land no depreciation, plant depreciation. For recognition in the asset, you can recognize them as one single asset. For depreciation, component wise. Recognition of the asset together. Okay. Next, it incurred 35 lakhs for material and direct labor cost for developing the plant. Construction material and construction labor 35 lakh. You help me in selecting whether this 35 lakh is part of the cost or not part of the cost. Part of the cost. What if in that labor cost 5 lakh rupees is their internal profit? Then they cannot include it. Internal profit cannot be included. But cost to cost they can add material cost as well as labor cost. Yes. What do we have after this? Company incurred rupees 10 lakh for head office expenses at New Delhi, which includes rent, employee cost and maintenance. This is the money that they are paying to themselves. So head office expense is allocated to the branch. This head office expense of 10 lakh should not be included in the cost. If it was included, I would have taken it to the total. Once I take the total of that amount column, I will get the total cost of the asset. But this, very nice. Then what do we have? Company borrowed rupees 25 lakh for construction of the work of a plant at 12% per annum on 1st of April. So they borrowed money. That borrowing cannot be added to the cost of the asset. However, interest on the borrowing can be included in the cost of the asset subject to fulfillment of conditions as per accounting standard 16. Case 16 says you can include if the asset is a qualifying asset. That is, it is taking substantial period of time for its setup. However, if the asset is ready for its intended use, you cannot capitalize interest. And if the active development of the asset is not happening during that period, again you cannot capitalize. We learn this in accounting standard 16. Understood? Then, director finance of the company incurred traveling and meeting expenses amounting to rupees 5 lakh during the year for arranging the loan. This cannot be capitalized. He is going to meet the financier, is meeting that financier. For all that, they've incurred 5 lakh rupees expense to get 25 lakh rupees. So is that included? No. So that is there, no? Whatever that meeting, traveling and meeting expenses, that will not be included. Interest of 25 lakh is there, no? On that 12% interest, do 25 lakh into 12%, you get 3 lakh. Can it be included? Yes, for the period of development. To the extent it pertains to period of development of the asset, can be included in the cost of the asset. There is little more information on this. Let's wait to read it. See this. On November 1, 2023, construction activities of the plant were interrupted as the local people along with activists raised the issues of environmental impact because of this construction, and it came on standstill for 3 months. So development of the plant happened from April till November. April, May, June, July, August, September, October, November. 8 months of active construction has happened. We're paying borrowing cost for 12. 8 months is relevant. 8 months can be added. Am I right? Then 3 months it will come to standstill. Read what's happening after that. With the help of government and NGO agitation. Agitation was over by February 2024, basically. So when did it stop? It stopped in November. So November, December, January, February also there was no active development. So November, December, January, February, during those 4 months, plant construction was stopped. So interest, would it be paid during this period? Yes, but can it be capitalized? We'll still pay interest for 12 months. But in that 4 months, we did not do active development of the asset. So interest pertaining to these 4 months should be charged to P&L. During the remaining 9 months, 8 months, active development has happened. Get that? So during those 8 months, whatever active development of the asset has happened, we will capitalize. Got this? April, May, June, July, August, September, October, November I won't count. By 1st of November. So 7. So how did you say 8? March. I'll repeat. April, May, June, July, August, September, October, 7 months active development has happened. These 7 months interest should be capitalized. Got it? After this October, November, December, January, February, 4 months, charge it to P&L. Then March, capitalized. Understood? So can I say from April to October and March, that is 3 lakh rupees interest into 8 months divided by 12, 2 lakhs will be capitalized, and interest pertaining to the months of November, December, January, February. How many months? 4 months. That is 1 lakh, which is 3 lakh into 4 by 12 will be charged to P&L. Will be charged to borrowing cost can be capitalized to the cost of a qualifying asset if it is incurred during the construction period, not before, not after, not during the active development being stopped. Understood this? Then what do we have? Work resumed in the month of March and work got completed, or I don't know if it's completed. However, to balance the impact on environment, that NGO was on alert, stop, no, the factory. For the work to get resumed, government gave an order asking you to install certain devices, and this costed you 6 lakh rupees. So maybe exhaust, they wanted you to put long chimneys, or water treatment before you release that chemicals out. Some kind of expenditure has to be incurred to install some equipment. How much did it cost? Can I say this 6 lakh will be included in the cost of the asset? Yes, devices installed on government order 6 lakh is also included in the cost of the asset. But take the total of the total items incurred, 50 plus 35 plus 2 plus 6, 93 lakh is the cost of the plant. When it comes to depreciation will not be charged on 93. Depreciation will be charged on 43. On 50 lakh, no depreciation. Why? Land, indefinite useful life, no depreciation. 43 lakh, we'd have to charge depreciation. Everyone got this? Now, as we've done with the entire case study, let's see the questions. Shall we? Always you should read the questions first and then read the case, because this is classroom discussion and I'm explaining it to you first time. I'm reading the case and then the questions. But in the exam, always you read the question so that you know what is required and what is not. Which of the following expenses cannot be included in cost of the plant? Cost of the land can be included in the cost but cannot be depreciated. Construction material can be included and will also be depreciated. And head office expenses, this will not be. Borrowing cost included partly. So among them, the easy pick option is head office expenses. But for you to just know what items cannot be included, you cannot include head office expense, you cannot include borrowing cost during interrupted period, you will also not include traveling and meeting. Cost of the land will be included in the cost of the plant, but for depreciation it will not be. So among the options given here, option is head office expenses, which is completely not included, not depreciated. Don't pick land. Why? Land can be included, but depreciation charge madbekare will exclude. Understood that? Come to the next one. How much amount of borrowing cost can be capitalized? How much amount can be capitalized? See, 2 lakh can be capitalized. 1 lakh will be charged to P&L. Am I right? So the answer is option B, 2 lakh. Third one, total cost of the plant. Total cost of the plant is how much? 93 lakh. And we don't know if the asset is completed. Further cost, if it is incurred, it can be still added. As on 31st March, cost is 93 lakh. Got this? Then the last one, amount of depreciation for 31st March 2020. Amount of depreciation. See, this is a trick question. We will say 43 lakh into 10% because throughout the focus is that land should not be included. You will think 93 lakh ali 50 lakh should not be included, 43 lakh male 10%. Understand two things here. Number one, they have not told construction of the plant is complete. Second one, even if you assume that the construction of plant is completed by 31st March, you can only start charging depreciation. But period after that asset is ready for use is zero. You can only start charging depreciation from the day asset is ready to be put to use. Asset is ready at the year end. For this year, there will be no depreciation. They asked 31st March 2024. Depreciation is nil. Why? Asset is ready for its. Actually, it's not ready. They have not told. Even if you assume it is ready only by year end. You cannot charge any depreciation for the year because period remaining in the year after the asset is ready to use is zero. So depreciation zero. Understood? Slightly tricky, but if you are having a good presence of mind, you should have been able to ace this.